Hey guys, and welcome back to the Layah Heilpern show. It has been a crazy start to 2024. We've seen new all-time highs for the year. We have seen the Bitcoin spot ETF, but that has been a little bit controversial actually. And so that's what we're going to talk about today. We're going to talk about whether we're excited or not about the Bitcoin spot ETF and what the alternatives could be. So guys, before I bring on my guests, please don't forget to hit the like button and subscribe as I'm going to be bringing you a lot more crypto content. So joining me on the show today is Dominic Ryder, the CEO of Alvara, the platform that allows you to manage and invest in on-chain funds. Let's bring my guest up. Dom, welcome to the show. How are you?
Very good yourself, and thanks for having me.
Yeah, great to speak with you. It's been such an interesting year. We've had, like I said, the Bitcoin spot ETF, and I think that has to be one of the most controversial things, believe it or not, that I've seen happen in the space in the last few years. Simply because some people are excited because I guess it gives Bitcoin and the rest of the space this credibility. But other people are really concerned about centralization and, having people like BlackRock, buying up thousands, millions, of Bitcoin. So before we get into Alvara and everything, I'm intrigued. What's your take on the Bitcoin spot ETF?
Yeah, it reminds me of that. Have you seen that meme where it's like 2017 Bitcoin maxis, and it's that muscular dog, and then it's the wimpy like
Yeah.
pump up head, please BlackRock. Yeah, I mean, I used to work in traditional finance, and so it's once you see how the sausage is made, I think that's like you don't eat the sausage, and
Oh, that's
yeah,
a way to put it.
honestly, it's not. It's pretty much exactly how it's portrayed in all of the negative, negative movies and all the funny movies like Wolf of Wall Street. I mean, back when I was there, I was there after like 2008 when they were supposed to have like cleaned it up, and even then it was still as bad as it was. But yeah, I think that it's like with Ethereum and Lido, you get these same arguments, and the legitimacy is one thing, but at what cost? Because that the sort of ownership and centralization of that is inevitably going to cause at some point, if they decide that suddenly it's out, let's say that they push forward this narrative about money laundering, even though it's transparent, it's recorded,
Right.
then suddenly if that gets just ordered, then you have everything that's been loaded up into spot Bitcoin ETFs being dumped back on the market, and so you're always going to have that hanging over your head. So yeah, there's pros and cons.
Yeah, and it's been interesting because everybody was expecting, this crazy bull run, which we have seen, but we also saw that it was still a bit of a buy the rumor, sell the news event. So yeah, it's been an interesting start to the year. But when I came across your project, I thought, oh well, this is sort of like this interesting alternative. But before I do get into that, I also want to understand a little bit more about your traditional financial background. So tell us about your background in TradFi and how you moved from TradFi to crypto. And I guess in some ways, how has that shaped what you now do in crypto?
My time in the sausage factory, so to speak. Um, yeah, I mean, I started out as in fact, it was on my what was supposed to be a gap year straight after college, which is equivalent of like high school, I think, in America. It's like 17, 18 is college. That's high school, isn't it? Not sure,
High
but
school, yeah.
yeah. So I joined a junior broker, 250 cold calls a day, commission only, like everything that you can imagine that environment was proper, kill or be killed. But just the
Mhm.
buzz of the environment, I did extremely well, and I ended up trading derivatives at the company rather than sourcing clients for the derivative traders and running the desk there. And eventually I moved to St. James's Place, which is a FTSE 100 wealth manager here in the UK, where I was associate partner. Hated it, writing suitability reports, financial advice for rich people, especially in London, where they're all in finance anyway, and nobody actually thinks that, no one listens. They just think they know better. So moved from there to traditional venture capital. Nothing too exciting, like, investing into like tech and Google. We were renewable energy, asset-backed investments, like very, very safe, trim and proper. But that was back into like a sales-based role. But I originally got into crypto, depends on employed and starting a business in crypto 2021. But I think the first token I bought was XRP back in 2018 for
Oh, okay.
I know, not good, is it? I've automatically got bad points. But yeah, I finally sort of broke away from traditional finance, like June, incorporated my first protocol, and then launched my first token in August. But what originally got me into DeFi rather than TradFi, I knew one of Julian Bouteloup, who was one of the original Curve developers, Curve Finance. His COO of his company, State Capital, was in the trading group with me, one on Telegram, funnily enough, and that got me into like Curve. It got me into like Stake DAO. It got me into like Badger, Sushi, all of the sort of DeFi summer and the run after it before everything kicked off. And so, even though my first protocol event was sort of metaverse and gaming, DeFi was the original thing that brought me into crypto overall and into sort of DeFi.
But how have you been able to, I guess, bring your knowledge of the traditional financial world to DeFi and crypto?
So it's mainly about, well, there's a lot of, well, it's how much of a crossover there is, because hopefully one day what matters in the traditional financial world, such as, you know, fundamental valuations and how you value stuff, will pass over into crypto, because right now a lot of value is placed onto what is new and shiny rather than necessarily being about the tech. And we all dream of a day where it is about the tech, but unfortunately,
never.
Yeah, I mean, it's one of these where, again, I think when I first got into crypto, I thought, oh yeah, everyone, if I build something good, people will see it's good and they'll use it and they'll come.
No.
I soon learned that no, absolutely not. That is the exact opposite. And so I soon learned what it was like to scrap it out with every other altcoin between like the top 200 to the 2000, and you're just fighting for attention. Because in the normal world, in traditional finance, what you don't have is that if something is like a Ponzi or a scam, it's reported and unregulated. In crypto, that's your competition. And so the problem with
Exactly,
is that they promise the world and they don't deliver. And so my background, and yeah, being a regulated individual at a firm, we were always taught compliance. And so whenever we were talking about a trade that went well as a trader, we had to caveat it and give what was called balancing, where we say, well, of course, not every trade is a winning trade and it can go down as well as. And so then you see what everyone else is doing and they're just talking about 100x to the moon. And you're sitting there like, well, you know, you can stake on our platform, but the yields can vary. And you're so,
right.
even though you're doing the right thing, you are, it's like entering a bodybuilding competition. Everyone's on steroids and you're just sitting there with a protein shake. It's always going to be, and unfortunately, the current industry, we are handicapping people who do it the right way, because as much as people talk about the tech, talk about decentralization, in reality, you look at what money talks and you look at where the money goes. And even these exchanges, they love to talk about like ZK. They love to tweet all of these like knowledge articles. They list scams 24/7. They continue to list scams because they list what's volume and what's getting them users. And so, you know, one day I'll be able to bring a lot more of traditional finance, like what we're doing with Alvara, is a way of completely decentralizing the fund management industry and asset management industry into a way that brings it all on chain transparently in a manner that allows for a complete meritocracy. So when I was applying for roles after being a derivatives trader, 10 years in traditional finance, because I, on my gap year, found my role, did extremely well, but I couldn't get a look in or an interview at Goldman or JP Morgan. They would easily hire a 21-year-old who had a, you know, first class honors from Cambridge or Oxford in geography over me without a degree who had 10 years of experience in the financial industry, because you tick a box and they filter it out if you don't have that degree. And so that always frustrated me about this glass ceiling where, you know, talent is based on education. And so what we've basically built is something that completely do away with that, where a leaderboard is ranked and it doesn't matter who you are or what your background is. if you perform, like, you will be shown and highlighted as the, top manager. And you don't need to have a CFA, Chartered Financial Analyst. You don't need a IMC, Investment Management Certificate. I got exams from CISI, Chartered Institute of Securities and Investments. All of that no longer matters. That is what gets you, these jobs in traditional finance, but that is no measure of talent, especially with trading. So a lot of it is like regulations, like what does PRA stand for, like FCA stand for, and that doesn't protect anyone. It's just there to gatekeep people out. And so we've blown all of the doors of that wide open with Alvara.
I think you've touched on just a really interesting point in general, which is, and I talk about this a lot, the idea of just university, and how in order to get a job, you need to have a degree from university. But in reality, that makes no sense, because most people spend 3 years just partying, drinking, and smoking. So would they be a good employee as opposed to the person who actually has the real world experience, like yourself, been trading or whatever it is for 10 years? It's completely messed up. And I actually think that's one of the things that people love about crypto, the way that there aren't any glass ceilings, the way that it really is borderless in that sense. And it really does, open everything up to everyone. There's just so many opportunities. That's one of the reasons why I love crypto, actually, to start with. Especially because I started as a journalist, and I was too young at the time, so they wouldn't give me an opportunity to be on screen. But crypto would give me the opportunity, So it's a very interesting. Let's talk about Alvara then. What does it really mean to be to have a decentralized fund on chain? Like, what does that look like? What does that mean? And who would use something like this?
So there's a couple of elements to the protocol, and I can load up the demo on testnet now if you like, or in a little bit.
Let's do it.
Let me present here and share. There we go. Alvara. Check I'm on Gorally so that we don't have a. I'm on Gorally. Yeah. So essentially, there are a couple of parts to this. We have the token standard that we have built. Now, this is independent of Alvara. The Alvara Protocol and the Alvara token, the ERC20, is separate from the ERC BTS. So we are calling it the ERC BTS because we've submitted for an official number and done everything the right way. But until that time that we get the number, we're not going to make one up like a certain other token standard that's been very popular and trending on Twitter recently. So ours stands for
You can name it. It's okay.
ERC 404. So that's experimental and unaudited token standard, which I don't know if they just didn't know how to go through the process, or they weren't confident that they would actually get a number. But BTS is basket token standard, and we didn't snatch a number without asking. We're waiting for our official one, and we're hoping to have some news on that anytime now. But they are independent, because a token standard, you can't gatekeep it, you can't patent it. You could, but what's the likelihood something that's not open source becomes a go-to standard? It just doesn't happen. It has to be fully decentralized, fully out there, and fully scalable. Because a lot of our competitors, that's where they hold themselves back, not meaning to, but if you don't have full decentralization in this sort of protocol, where you are an asset fund management and you're trying to replicate that, if you decide who can or can't manage, a basket of tokens, that's the job of the regulator, who can and can't manage funds in the real world. And so you're opening yourself up for a lot of negative attention, even though you might be doing it to try and stop bad actors from running these. Unfortunately, that just means that you'll always be centralized. So we've solved this problem by essentially, I think this is a Pepe short that I did earlier, which is going to have to be the NFT and image that we're going to use, and we can put demo.
You're trading Pepe right now. How's that going?
Oh well, the short went well.
Good.
If I kept it if I kept it on, I think it would be even better. I'm not sure where the market is, but when I last looked, it was having a bit of a drop. So this opens up the protocol to everyone, and fund management, asset management in general to everyone, because we're making it as easy as possible in order for anyone to become their own manager. And so,
but when you say, just a question, when you say to anyone, is this retail investors? Is this traders? Like who is anyone? Institutions?
Yeah. So the token standard itself is open source, which means that anybody can code one. If they are a developer or hire a developer, they can get that code from GitHub or from our website, and they can code their own basket token standard. What we are facilitating with Alvara is the mass adoption of this. And so it's not a fee, it's just more of a stipulation for providing this factory contract, which allows people to mint one of these just in one click. We have 5% as a minimum, which is in the Alvara token as part of every basket. And so that isn't part of the token standard. If anybody wants to code their own, they don't need to have any Alvara whatsoever, because they are separate. One's open source, one is our protocol, but we are effectively giving that as like a stipulation. If you are using the factory contract and the DIY version, then a minimum of 5% is in the Alva token. You can have more, but it isn't less. So it's like just a way of providing this as a service without charging, but having a benefit in there for the DAO. So if we put this as a metaverse basket, let's have some Axie in there as well. So we'll go for 35, 30, and 30. Should equal 100. There we go. So right now, as I say, this is on Goerli. So at the moment, it's hooked up to Uniswap V2 just on Goerli ETH. But eventually, we will use an aggregator to make sure that it can go through as many liquidity pots as possible, and also chains as possible, because we don't want anyone to be restricted, especially because we're trying to source the best liquidity, because best execution, slippage is going to be very important if we want that institutional adoption. So you can see here, and I'll load up the actual transaction for you as well. See if this indexes in time. If not, we can always jump back onto the BTS leaderboard. A quick refresh. There we go. So you can see, called the function from my wallet onto the factory contract. Everything swaps underlying. The BTS is minted to the wallet from a dead address, and then you now have that. So every single owner gets 1% as standard from the factory contract, but it can be up to anyone who codes it. And essentially anybody can contribute, and we'll wait and see if the leaderboard loads up once it's uploaded the actual demo one into it. There we go. So you can see we are here, and we can contribute to that 0.1. Let's do. And the key part of all of this, which makes us this very, very bottom layer of scalable infrastructure, is the fact that whenever anybody contributes to anyone else's basket of tokens, they receive unique transferable ERC20 LP tokens in return. And so that means that if you are a successful manager and you're earning enough from your 1% or however much to justify building on top of this, you have that unique ERC20 LP token. So you can build governance, you can build staking, you can add liquidity, you can build derivatives, you can build lending strategies. Anything that can be innovated on top of a normal ERC20 token can be built on top of your BTS, because it has its own unique transferable LP token. So like Curve Finance, where it's this very bottom layer, where Convex is built on top of it, which is a top 100 token, StakeDAO, Yearn, Pickle Finance, Beefy Finance, tens and hundreds of these liquidity aggregators, which couldn't exist without Curve. we have that exact same scalability, but with tens of thousands or hundreds of thousands of individual investment DAOs and tokens built around their fund that they can manage. And so the level and scale of what can be built on top of us is of the similar size to something like Curve Finance or like Uniswap, because it's a never-ending web. How far out it goes is completely down to what people decide to build on top of it. And all of that leads back to us. So if you are a institution and you are sitting on, let's say, page 4 or 5, because inevitably the top performers are probably going to be those who are just, aping into these random memes, and that gets them these insane things, but with very little risk management. What we've done to make this truly institutional and to unlock institutional capital is we've also taken the gauge weight governance style voting system as Curve. And so the more Alvara you have, the more you stake, and the longer you stake it for, the more voting power you get. And the more voting power you get, the more rewards you can send to your BTS's LP token holders just for sitting in your BTS, which means that you can incentivize assets under management into your BTS just by buying as much Alvara as possible, staking it for as long as possible. And that drives a perpetual incentive for institutions who want to grow their assets under management to buy Alvara and to stake it for as long as possible, up to 4 years to get the full voting power. And so we have 5% of every factory minted BTS purchasing Alva. We have 5% all as a minimum of every contribution to a factory contract buying Alva. And on top of that, we have a full incentive system where the more you stake and the longer you stake it for and lock it away for, the more votes you get to send yield to your contributors just for sitting in there. They will still get the full performance of anything in the underlying, but they also just get a yield just for parking their money there. And so this gives true accumulation incentive. And you had the Curve Wars, which anyone can Google, was essentially Convex, Yearn, and all of these other liquidity aggregators fighting with each other for as much VE Curve, Vote Escrow Curve, as possible, because of how powerful it was in growing AUM and bringing assets to them as a liquidity provider. And so we've taken that mechanic, but scaled it out to the ability of tens of thousands. And so our job as a protocol is to basically allow for the mass adoption of our token standard to the point that it becomes synonymous with on-chain asset management, just like how nobody even thinks of the ERC 721 when they mint an NFT. The ER 721 just is the NFT. There's a 1155, which is also an NFT, but people just don't think about it because it's that much of a go-to. And if we can get that level of adoption for the token standard, and if anyone listens to Larry Fink from BlackRock, who says this himself, tokenization of assets is the future, what standard are all those funds going to use when they come on chain? If we are already aggregating against every single other one in the industry, then if they don't use the token standard that everybody else uses, it'd be like someone from Web 2 coming in, launching an NFT collection, but coding one that doesn't even go onto OpenSea or any other NFT platform because it doesn't recognize us. It only recognizes 721s and 1155s. It's counter business productivity to not use the exact aggregator everyone else is using because there's no comparisons to be made. And so that's the scale and level that we can potentially take this to, which is, if you buy a metaverse or a gaming token, you'd get to a few billion, sure, maybe 10 billion. But this has no cap because the traditional financial industry has no cap. It has infinite scalability, composability. And even to this day, after working on this for 2 years, people will still ask me things and I'll realize, yes, it can be used for that, or yes, you can do that, because it's this very, very ground layer of a whole new asset class in crypto. Every BTS could be on CoinMarketCap tracked, just like a new crypto asset. And even for example, the level of like objections that we're getting now, or questions from people who are looking at ways to take this on, is what if DEX liquidity doesn't keep up with you, which is a bullish objection to get, because of course, if we're growing at such a speed and people are only routing through DEX, if the liquidity doesn't keep up, then we won't be able to facilitate the institutions. And so now we're talking to people like Fireblocks, like FalconX, Coinbase Custody, because we need to give people an option for centralized liquidity sources if they want it. At its very core, we are fully decentralized. But when institutional capital comes on board, you know, best execution is something in traditional finance where people will move like firms if like there's 1 basis point, like 0.01% difference. When you get to a certain size, it's massive. And so the fact that we're having to focus on those sort of things is really, really bullish for me. And so we've made it so easy to get that mass adoption through the gamification, and, you know, the trending, the sort of like everything that you have on like a CMC or CoinGecko or DEX tools, all of those monetization features Alvara has. It has the secondary marketplace where you can start a BTS, manage a BTS, and then sell the rights to it on our marketplace, just like an OpenSea. And on top of that, we are the on and off ramp to contribute to all of these individual BTSs, which means that those are all solid Ethereum revenue, no accepting our token in order to sell it to make money ourselves. All of that is shared with stakers, and all of that is used to buy back and burn the Alva token. So yeah, in terms of an opportunity, when people are looking at something, like there's one where you do have a ceiling and then there's those that don't. And we are truly, you know, there's a lot between getting from where we are now to where we could be. But where we could be is infinite in its potential compared to, you know, other more restricted protocols.
Right.
I'm conscious I've been going on for a little bit.
No, it's really interesting. You know, I think that there's definitely a gap in the market for something like this. You know, one of the things which I'm curious about, and I feel we kind of touched on this, but I don't feel that maybe the viewer fully understands just yet. Who would be the ideal person using this? Because, you know, you talk about making the token standard mainstream. Does that mean retail investors? That's the goal. Is that correct?
Yeah, so there's a couple of sides to it depending on who is approaching the platform. So at its core, it is consumer facing, where like a Aviva, Vanguard, Hargreaves Lansdown, or other sort of I guess broker, where people go on and they can buy and sell stocks, or they can invest into funds. And at its core, we allow for people to do that, to basically be this marketplace and this shop for people to go and look for exposure to the market, in whether that's somebody who minted a BTS, which is every Animoca backed token that launched in 2021. They may launch that as like almost a tracker, and at the same time they could launch a Pantera 2021 tokens equivalent. You know, if they choose to sell that in the future as a manager, as a revenue stream, then, you know, they have started protocol, they have managed it, and they have sold it and gone through a full business life cycle within the platform. At the same time, you've got the consumer end, where anyone can shop around and anyone can contribute to anyone else's. And because the token standard, as I say, is completely open source, there isn't the limitations on just the factory contract is only for those who, you know, want that quick, easy solution. We can have institutions, because where are they going to reach all of these people who are contributing and giving AUM? Well, they'll come to the. I mean, the first move advantage we have is like if OpenSea released the NFT themselves, because we invented the token standard, we're aggregating it, and we're giving everybody the chance to use it. So yeah, so
That makes sense.
could be anyone.
So what we looked at, the demo was the test net. When can we expect the main net?
So we should hopefully have it ready for our launch. So we have our public sale going live in 8 days with Tencent, Gem Infinity. They've launched huge protocols like Everdome, MetaHero, Satoshi Island, Fame MMA, all through them. I think that they're not as known, but only due to the fact that they only go for such good quality, which means that they don't have these all the time. But the last one they had was Farcana, which was really big. And so that is 8 days time, and then the token launch will be 10 days after that. So we'll be live within 3 weeks with the token, and the platform at present, obviously take into account with crypto, and everyone loves to. I always say if you think it's going to cost X and take as long as X, then double both, and you'll probably be more accurate. But it should be at token launch, but fingers crossed it can get there.
And when we spoke earlier, you made a really good point, which was just because you build it doesn't mean people are going to come. So let's talk about your marketing strategy. How do you plan to, get the word out there, but also tell the story in a way where it's easily digestible? People can understand it. People can understand the value that it would bring to them.
Yeah, this is the main thing. Education on it, because I've had that. Funnily enough, whenever I've sent round the only time I've ever got a rejection from a like VC company, for example, has been where I've sent them the deck, but they haven't accepted the demo and getting on a call with me, because inevitably they'll look through, they'll look and skip to the valuation, or they'll look at they hear the word LP tokens, and then I'll get a reply back they're not interested, and I'll ask them why that was, and they'll say, well, we're just not investing in DEXs at the moment. And it's like, you didn't read it, did you? But so we're trying to give, well, firstly, coming onto as many shows like this and talking to the audiences, as well as trying to digest it and get it down to a succinct. I think we've managed to get it to 4 minutes. I'm not sure what ours was, but we had some back and forth, so we'll use that as an excuse that it was longer. So yeah, trying to get through that gap, because once people really get the scale of what we're trying to do, there's no guarantees we can get to those levels in terms of the scale that we want, but the sky is the limit in terms of how much composability this has. And one thing that will really help us is getting that official number, and being numbered token standard from the official, from Ethereum, rather than picking it out ourselves. So that will help give us the legitimacy, and hopefully it's good timing with the fact that the 404 is well hyped on Twitter. It will be interesting to see if people, you would think that people would care about a new token standard that did it the official way, because if they care so much about one that is unofficial. But yeah, stranger things have happened, and crypto doesn't tend to, when people do it the correct way. No, not interested. Give me scams. That's what they want.
Well, you know what? You make such a good point. That's exactly what I've noticed as well. And everybody's noticed this actually. This is why the community, it gets so toxic, because it's like a lot of these chains, which were I won't name any, but they were very popular over the last, let's say, 2 cycles, particularly last cycle. They're losing popularity. There's no use case. Nobody wants to do anything on them. And so what they've decided to do is build meme coins and shit coins on these NFTs to try and bring in more adoption and more traction. And it's completely true. People do not want, no, people of course want legitimate projects, but they can't help themselves. The community is full of so many degenerates. They can't help themselves. They love a scam.
Yeah, desperate, isn't it? Especially when you see these chains doing it. I mean,
exactly.
We will get. Hopefully, I mean, I've been saying for ages, that eventually crypto will mature enough where people start looking at things other than this. And I've been telling myself that doing the right thing will eventually pay off the benefit of crypto. And I've been telling myself that for so long. And I was thinking, oh no, the bear market will get rid of all that toxicity. And then now we're like getting back into this bull run, and it's like, oh, they're all still here.
Yeah, and I mean, especially with the bear market, I think it's funny because, the more legitimate projects are very quiet during a bear market, right? And what we tend to see more of in a bear market are the meme coins, the shit coins, and that exact toxicity, just because you can pump and dump them so easily, right? Like they don't depend on the
Well,
cycles.
breads
Yeah,
and circuses. It's like
yeah,
the bookies is always full. Doesn't matter if you're in a recession. Doesn't matter if everyone's poor, inflation. There's
exactly.
always people at the casino. There's always people down at the races. It's just yeah, gamblers, entertainment, mindless speculation.
Yeah. So, I know you mentioned about first mover advantage, but I'm curious, do you have any competitors that you see are doing something similar to you or that you're watching right now?
Yeah, I mean, definitely competitors in terms of a lot of people have tried to, because it is such a huge market. Obviously, it's the whole like asset and fund management industry, and
Yeah.
anyone who believes in crypto, believes in tokenization of assets, and believes that crypto, is the future. And the fact that a share certificate exists is testament to the
Mm,
fact that it should, be recorded somewhere where it can't be
for
edited.
sure.
Um, but they've done it for the right ways, but they've handicapped themselves by the fact that they are trying to control decentralization rather than manage it. And this is the key difference with us. We have to take on the role that people have to take an ounce of responsibility for themselves. And the reason why is if you look at Uniswap Labs, or if you look at like PancakeSwap, if you go to
Mm,
buy a token on there, they will flag to you that this looks like a honeypot. If
mhm.
you ignore that and buy it, that is on
It's your
you.
fault. Right.
And this is the approach that we're taking, because our competitors, some of them like Enzyme Finance do this as well, but they have a limit of, I think, 12 tokens maximum per vault, they call it. But we are allowing for full discretionary management, and that is because 99.99% of traditional asset managers do not let their fund contributors, shareholders vote. They have like one vote per annum, if at all. And that's the key difference, is if you're building for an industry that doesn't exist, one that votes on every decision of a fund manager, the fact a fund manager is needed and you are buying into that manager's fund is because of you're hopefully backing their experience and performance. And this is the key difference. We are the Uniswap Labs to the Uniswap. Our job is to make sure that we are telling you if somebody has created a BTS and they have full discretionary permissions. We allow for people to connect their Twitter account, YouTube, for example. Let's say that you have like someone like Pentoshi. People don't know
Mhm.
who he is, but he has a trusted Twitter account. Obviously, he could still, do something bad, but he has a certain reputation to uphold, and so people will
Yeah, of course.
trust his Twitter connected BTS more than just some random one. So we're there to basically give a trust score similar to like how Dex tools will do it, or flag things. And if somebody wants to contribute to a BTS, which the person hasn't provided any information, people will have the ability to submit KYC if they want, but it's not a requirement. And we have to take it that way, because if we start deciding who can or can't manage one of these, we're doing the job of the regulator. And that's
Mhm,
going to be a
mhm.
big red flag and a big target on our back, because essentially we have to be fully decentralized, because the Securities Exchange Commission goes after tons of tokens as securities,
Right.
but they don't go after Uniswap because these tokens list on it.
Mhm.
Because it is this decentralized layer, and it doesn't have a say, it doesn't have a voice. And as soon as we start having a say and having a voice, that is a centralized team, and that is a venture. We are there to manage the protocol and to make sure that people are safe, like how
Yeah.
Bitcoin developers, they basically just secure the network and try and improve. And that's exactly what we're doing, because we need to, at some stage in crypto, crazy, I know, but people need to start taking responsibility for their own actions.
Oh,
And
it's a big ask, Dom. It's a big ask.
I know it is, but you know, if everybody just did their own research in any, whether it's a meme coin, whether it's like a normal like a metaverse, or like any like thing that people are buying, people just did their own research and didn't rely on somebody else, follow someone else blindly into something, and then would get upset when it doesn't. It's like people think that you're controlling the buy and sell button for people. And that's a big problem, because it leads to, and I see it now with some launch pads, they will give like hurdles, and they'll say to you as the project, you need to maintain a 5x for 7 days. And it's like, oh, so I need to guarantee all of your holders that they all make money and we make everything a risk-free investment, because that won't perpetuate bad behavior in the future, will it? You can't, if people's behavior will inevitably, it's like participation trophies, like, well done, you get a free 5x.
Yeah.
Don't take responsibility. And it's all on the team. And how is the project, the people innovating in this area, supposed to, like, if we do not get any of the public raise, if we don't manipulate the market, which is supposed to be illegal, and it's just so counterproductive, and it perpetuates this like toxic environment, because if everyone's so used to getting a 5x on what is supposed to be the riskiest thing, it's like when something first goes live and has no track record, that is supposed to be when you're buying something at its riskiest, and you're making it a risk-free bet for people, and then expecting them to be nice to you when they actually buy an established project. But established projects, nobody likes them because they're established and they want the new shiny thing, and they get guaranteed 5x for launch pads. So yeah, I could rant on this forever, and I've probably gone too long already.
No, you're good. I think everybody feels the same way, and this space is a lot of growing up to do and maturing to do. But we'll see how it goes. But it's an interesting time in the market. We have the Bitcoin halving coming. I'm curious just to get your take on where we're at in the market right now. Me personally, I think that we will probably see new all-time highs this year. I think you can look at history. History is the best indicator of future behavior. But I definitely expect a pullback before the halving. Everybody likes to be super bullish, which I am, and there's always a lot of hopium. But I just feel that we don't go up forever. Markets need to cool off, and I definitely think there's going to be another pullback before the halving. What's your take? Do you think we're entering a bull market? Do you think we're already in a bull market? What do you think? I've
got a controversial take, and it's something I've shared on Twitter. So it's to be fair, I think it's I'll show you on TradingView essentially, because let's see, I'm not sure if you can see my screen or not. But essentially, this is my past experience. There we go. So what you're looking at here is the S&P, which is purple, the Chinese stock market, Shanghai, which is pink, and the interesting thing that you're looking at is the reverse repo facility, which not many people know what the reverse repo essentially is. And the reverse repo facility is where everybody parked their money as banks after the QE infinity that the Fed went on. And so everybody was using that to buy securities and to buy treasuries. And that is what QE is. You print money, and that money is used to add liquidity to the market by buying treasuries, mortgage-backed securities. But they printed too much. And they had to create this facility called the reverse repo for the excess liquidity to go in to the Fed. They took it back and they paid interest. Now that Janet Yellen and Biden are literally printing treasury bills like nobody's business, which is US debt, and issuing it, all of that money is now flowing back out. So let's see if I can get the repo here. Now let me invert that. And so what you can see is that we have just under 500 billion left. So what is the difference between the Fed printing money to buy debt and other securities versus money flowing out of the Fed's repo facility and being used by the banks to buy debt and securities? And the answer is zero. And so we have had $2.4 trillion worth of what was printed during COVID, but parked at the Fed's reverse repo, flow back out into the market since beginning of the year. And that's $2 trillion, which of liquidity, which has flown into the market. It's not QE, because QE, they're printing it. So this was printed a while ago, but there hasn't been any debt to buy because of how much they printed. Suddenly that debt has come out, and that money has flowed out of the Fed's reverse repo and into the market. And would you look at that correlation with the NASDAQ?
Yeah.
And essentially, let's see if you can have that there. So that is the reverse repo versus the NASDAQ. And so in March, this will go to zero. As in, if you look on here, you can see this is where it usually is. So this is about to run out. And so what happens when it does run out is the question, because China's not buying US debt anymore. Russia's not buying US debt anymore. The Saudis aren't buying US debt anymore. And the reason why is because Biden sanctioned the Russian central bank, which is a big no-no. You do not touch the clearinghouse. You just don't, because the problem is that when they did that, all US debt became worthless that the Russians had. And if you're China and you're looking at Taiwan, and if you're Saudi and you're thinking about whether to get rid of the petrodollar, why in the world would you ever buy US debt or US assets again? You wouldn't. And so they've shot themselves in the foot, and they'll learn, and it will go down in history in like 20 years when they're looking back. What was it that caused meltdown of the US debt market? It will be that decision by Biden to sanction Russia's central bank. Because once this facility runs out, where's the money coming from to buy all of this debt issuance? Because it can't come from the reverse repo. The international buyers of these debt vehicles used to be 45% of all US debt held internationally. Now it's down to 30, and it's only getting smaller. And so the question remains, what happens in March when all this money is gone? And not only that, the bank term funding program, the backstop that they invented after Silicon Valley Bank was collapsed, this amount allows for emergency borrowing by regional banks, and that expires in March as well. Funny that, you'd think it's almost a coincidence that the thing propping up the banks is being rugged in March, and the reverse repo facility is going to run out in March, and to think that nothing's going to happen. But that doesn't mean it is bearish for Bitcoin, because we all know what happened in the regional banking crisis earlier. So even though I'm very, very bearish on the stock market due to the US debt situation and everything that comes with this, if history repeats, that isn't necessarily a bad thing for Bitcoin. Whether alts will have the same sort of reaction, if like the whole because essentially this, if there's no one to buy the US debt, it's a sovereign debt crisis, and they're not very good. And altcoins might not look as attractive. Bitcoin will look very attractive. Ethereum, by definition, like being close. Yeah. Alts like DeFi again, I think very good. But like, are people going to be buying like games and metaverses in like a sovereign debt crisis? I'm not sure. But it does tend to flow down, and
yeah, it does.
People will ape anything. But yeah, so interesting take of mine, but not a lot of people know about how the internal plumbing of the monetary system works. So you probably didn't expect that answer when you asked. You probably thought I'll just say, yeah, I'm bullish, and then leave it at that.
No, it was interesting. No, it was really interesting. Thank you. No, it's a different perspective. And I think that's really important because, like I said before, there's a lot of hopium in the market. And I think people definitely need to have their feet on the ground and have some reality and get some perspective of what's going on globally, and understand how that's actually going to impact the markets. But Dominic, it's been so great speaking with you. It's been so interesting hearing what you're building. And I think it comes at such a fascinating time because obviously, as I started this talking about the Bitcoin spot ETF and, all the controversy around that, just because of how people are concerned about the centralization issues of that. So it's really interesting to hear sort of similar alternatives being built on chain in a decentralized way. So where can people get in touch with you, follow, be a part? Like how can they get involved?
Yeah, so the website where you can find all of the social links is alvaraprotocol.io. I'm just at Dominic Vemp on Twitter, and jump to our Telegram, any of our other socials. Just make sure that you're checking the right links. Be wary of scammers. We've got a lot in crypto. But yeah, feel free to reach out. All of the team are more than happy to help. Like I mentioned, the scale of what we're looking to do is astronomical in its potential, but because of the fact that it is a new token standard and a new protocol built around that new token standard, it can be a hurdle of education. But once people really get what we're trying to do and the scale and what we could hit in terms of our potential, then people are really, really bullish. But yeah, if there isn't anything people understand, feel free to reach out. I'm more than happy to clarify.
Thanks so much for coming on, Dominic. And guys, thank you so much for watching. If this does interest you, then I'm going to leave a link for you in the description below. And if you did enjoy this show, then please don't forget to hit the like button and subscribe. And we'll see you all next week for more content.